Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. Glad you joined me. We're going to talk about some annuity examples, transferring annuities the right way. With some annuities, you can transfer them. Some annuity types, you cannot transfer them, which means that I just voided out that I hate all annuities thing because there's not just one annuity. I like when people say, never buy an annuity. You mean like all of them, all types of annuities? Or are you just broad brushing that statement? You know, I hear a lot of people say that. That's just garbage, or garbage, as they say in French. Let's get down and dirty with this. I'm going to talk about annuity transfers because if you own one, then you need to understand this before you get pitched to move it. But we're not going to do anything until the music. All right, so let's get down and dirty to the I hate all, like, don't never buy an annuity, I hate all annuity. Come on, okay. Let's go through the types. There are some types that are not transferable, and those are the single premium immediate annuities, deferred income annuities, and qualified longevity annuity contracts. Those are what I call annuitization products. You rip the knob off the water faucet, water's flowing. In this case, the income's flowing. So you cannot transfer those types, period. They're irrevocable lifetime income contracts. Now, some you can do period certain, but the majority are lifetime income. They're irrevocable. You're ripping the knob off, you're going to get the income. Now, the three primary types that are transferable are multi-year guarantee annuities. That's a CD type. It's the annuity industry's version of a CD. Fixed indexed annuities, which is another CD type product, a fixed annuity. And then variable annuities. Disclaimer, I don't sell variable annuities. I don't have anything against them. I just don't sell anything that has the potential to go down in value. My mantra is, you own an annuity for what it will do, not what it might do. And the will do are the contractual guarantees. So all I look at are the contractual guarantees. I never look at the hypothetical, theoretical, projected, back-tested, hopeful agent return scenario, unicorns chasing the butterfly, things that you see. Like, you need to buy this because it's just too good. You know, if it sounds too good to be true, it is every single time. With annuities, annuities are contracts. Period. That's the end of the story. So when we're talking about transferring annuities, let's talk about the ones that can be transferred. Multi-year guarantee annuities, fixed index annuities, variable annuities. I'm going to talk about variable annuities from a broad standpoint, a disclaimer, because I don't sell them, so I'm not going to talk about the investments. I'm going to talk about the broad picture of should you transfer. Now, the first thing that you need to understand about transferring annuities is just because you can transfer doesn't mean you should transfer an annuity. Annuity companies are smart. Life insurance companies that issue annuities are smart. They typically design the policies, a lot of the ones that you can transfer, so that it makes it hard to transfer. And what do I mean by that? If you attach an income rider or a death benefit rider, or some type of rider means an attached benefit to the policy, that's not transferable. Let me repeat that. When you attach a rider to a policy, and I'm talking about with MIGAs, fixed index annuities, variable annuities, and most of the time it's index and variable. When you attach a rider, that rider guarantee is not transferable, period. What's transferable is that accumulation value. So with the index annuity, it's that call option strategy. On the variable, it's the mutual funds, separate accounts, whatever you want to call them. That's what's transferable. Now, life insurance companies have the big buildings for a couple of reasons. The primary one is they know when we're going to die, right? The second reason they have the big buildings is they design these policies so it's hard to get rid of them. Rid of them, transfer them. You can't transfer those riders, so when those riders are attached, in order to access that benefit, you have to stay in the policy. So if someone comes up to you and says, well, your variable or index annuities past surrender charge, well, let's transfer it. No, it's not that simple and it's not that basic. Let me explain it another way. When you go through the application process, let's just say you decide to transfer an annuity, whether it's a variable, MIGA, index, whatever, and you say, let's transfer it. During the application process, my team, who is fantastic during the application process, they have to do a side-by-side comparison, comparing the benefits that you're leaving to the benefits that you're going to. And it has to be in your mathematical favor in order to transfer it, period. End of story. So those riders that are attached to your policy do not transfer. Most likely, to transfer to another annuity is going to be it's going to be a big hill to climb, because the annuity company that's receiving it, they're not going to accept the transfer if you're leaving the benefits on the table at the other annuity that you're coming from and it's not more than where you're going to. Did I say that right? I think so. Yeah. You know what I'm talking about. So just because you transfer it doesn't mean you can. Now, typically the transfers have to be in the same plating. Like if you're the owner, it has to be transferred, to another annuity. If it all works out, if this is contractually better for you, same plating, etc. I get a question all the time. Got a question the other day. Can you change the annuitant? Like, can you transfer from one annuity, and then when you get to the new annuity, can you change the annuitant? By the way, annuitant is the person or persons that the income stream is based off, life expectancy at the time you take the payment. The answer to that question is not all companies will allow you to change that annuitant. So there's a lot of work to do, and that's the reason you have to schedule a call with me at theannuityman.com to make sure that the proposed transfer is in your favor. We certainly will do that. We'll shoot it straight. We'll tell you the brutal facts. I'm the walking middle finger of annuity truth. You know that I'm not going to just to transfer it. I'm going to transfer it if we can do better somewhere else contractually. Now, which leads me to a lot of the sales pitches that are out there when it comes to transferring annuities and doing it right. The way to do it wrong is if someone says to you the following: let's transfer this annuity because the annuity that you're going to gives you an upfront bonus to transfer. If they say that, number one, it's illegal, and number two, they could lose their license if they're found out about it. Annuity carriers never want agents saying that, but do agents say that? Yes. Listen, annuity upfront bonuses, that's not free money. That's just part of the overall contractual guarantee. 100 pennies on the dollar. Nod your head. If it sounds too good to be true, it is every single time. Yes. Never, ever, 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 ever transfer an annuity under the assumption that the upfront bonus is either going to make up for the surrender charges or whatever, and the upfront bonus is nothing more than the overall contractual guaranteed picture. It's candy for the stupid. Don't be stupid, okay? There's no philanthropists at annuity companies giving money away. If the bonus, that's the overall contractual guarantee of where you're going to, from a transfer standpoint, if that overall contractual guarantee is better than where you're coming from, then great. But you do not ever do it. I see this a lot. People say, well, he's proposing I transfer the annuity because the bonus will make up for the surrender charges. Lose your license, agent. Game over. That cannot happen. And there's a lot of people that are doing that out there. Also, too, I would recommend you, if someone's proposing that change and they do that for you, first of all, you should use me. None of that garbage is ever going to happen. But let's just say you use your friend, your golfing buddy that's selling annuities, ask for a copy of that application, because the only way that some of these transfers happen is if the application is doctored with, as they say. So don't let that happen. When you transfer annuities, it has to be in your mathematical favor, not the agent. All right, so let me kind of go. I know I went fast. Stan, the annuity man, has the tendency to go 100 miles an hour verbally, right? I just did that right there. Let's go through the annuities that can be transferred. Doesn't mean you should. And the annuities that cannot. The annuities that cannot. Qualified longevity annuity contracts, deferred income annuities, single premium immediate annuities. We clear? Nod your head. Okay. The annuities that can, doesn't mean you should. Multi-year guarantee annuities, okay? Fixed indexed annuities and variable annuities. Those can doesn't mean you should. And remember, it has to be in your mathematical favor to transfer from one annuity to the other. Now, let's talk about IRA and non-IRA. If the annuity is held inside of an IRA, it's an IRA to IRA transfer if it's in your favor. If it's a non-IRA, it's a 1035 exchange. 1035, that refers to the IRS code that addresses annuities can be transferred from one annuity to another using the 1035 IRS-approved non-taxable event method. Now, 1031 is real estate. A lot of you out there are real estate people. 1031 is real estate. 1035 is annuity to annuity transfer in the non-taxable event. Once again, doesn't mean you have to transfer. So if you take anything from this, just because you transfer it doesn't mean you have to. It has to be in your favor from the one you're going from to the one you're going to, mathematically, contractually in your favor, okay? The next thing, which is big, don't transfer anything unless you let me look at it. Let me look at that transfer, or if you're thinking about transferring something, let me look at the policy that you have, and I'll shop every carrier out there to see if we can beat those contractual guarantees and it makes sense for you to transfer. I will also tell you, brutally and factually, that you might need to stay. And if you do need to stay, I'll tell you how to maximize the benefits that are in your current policy. So I know it's a lot. Key, though, is go to my site, theannuityman.com. If you're in that transfer mode, feeling kind of queasy, what you've been pitched, run it by me, schedule a call. I will help you all the way down the street, all the way down the road. I will get you to a good decision where you can make an informed decision on your terms and your time frame. And the majority of the time, spoiler alert, with a lot of these annuities with riders, you can't transfer them. You can't beat those contractual guarantees. Sometimes you can, and that's the reason we need to connect. But just know that going forward. Don't fall for the pitch of upfront bonuses and all that stuff. And we also can look at the plating of it. Can you add an annuitant? All those little details that are very important, I can help with. So listen, hit the subscribe button. I'll see you on the next Stan the Annuity Man video.